Picture this, the Oracle of Omaha, Warren Buffett himself, is going all in on a company that many thought was headed for the dustbin of history. That's right, we're talking about SiriusXM, the satellite radio giant that's been fighting an uphill battle in the age of Spotify and Apple Music. But here's the kicker. Buffett's Berkshire Hathaway just quadrupled its stake in SiriusXM. Yes, you heard that right, quadrupled. So, what does the world's most famous investor see that the rest of us are missing? Buckle up, because we're about to take you on a journey through the world of high-stakes investing, corporate strategy, and the future of audio entertainment. This is a story that's got even Wall Street scratching its head. Now, before we dive in, make sure to smash that like button and hit subscribe if you want more deep dives into the fascinating world of finance and investing. And don't forget to ring that notification bell so you never miss an upload. For those who might not know, SiriusXM is America's premier satellite radio company. They beam hundreds of channels of music, talk, sports, and news directly to your car or home. It's like having a DJ in space, spinning tunes just for you. But here's the thing. In a world where everyone and their grandmother has a smartphone loaded with Spotify or Apple Music, many thought SiriusXM was a relic of the past. I mean, who needs satellite radio when you've got the entire history of recorded music in your pocket, right? Wrong. At least that's what Warren Buffett seems to think. And when Buffett speaks, the financial world listens. Our story kicks into high gear in the second quarter of 2023. That's when Berkshire Hathaway, Buffett's legendary investment company, decided to go big on SiriusXM. They increased their stake from 9.7 million shares to a whopping 40.24 million shares. That's more than a 300% increase. Now you might be thinking, sure, but Buffett's got billions. What's a few million shares to him? Well, my friends, in the world of Warren Buffett, no investment is made lightly. Every move is calculated, every stock picked with surgical precision. So, the question on everyone's lips is, why? Why is Buffett, known for his conservative, value-driven investment strategy, betting big on a company that many see as fighting a losing battle against streaming giants? To understand Buffett's move, we need to cross the threshold into the world of SiriusXM. And let me tell you, it's a world full of surprises. First off, let's talk numbers. SiriusXM might not be the flashiest company out there, but it's got something Buffett loves: cold, hard cash. We're talking about a company that generates over $8 billion in annual revenue and consistently pulls in over $500 million in operating income every quarter. But wait, there's more. SiriusXM has a price-to-earnings ratio of about 14.4. For those of you who aren't fluent in finance speak, that's music to Buffett's ears. He famously prefers companies with PE ratios under 15. And here's the kicker. SiriusXM pays a dividend. A 2.22% yield to be exact. That might not sound like much, but for Buffett, who loves companies that return capital to shareholders, it's another check in the buy column. Now, Buffett faced some serious tests, because for all its financial strengths, SiriusXM is sailing in choppy waters. First up, we've got the streaming giants, Spotify, Apple Music, Amazon Music. They're all gunning for SiriusXM's lunch. And let's face it, they've got some serious advantages. They're tech-savvy, they're mobile-first, and they've got algorithms that can predict what you want to listen to before you even know you want to listen to it. Then there's the debt. Oh boy, the debt. SiriusXM is carrying a whopping $8.6 billion in long-term debt. That's a lot of IOUs for a company with just $216 million in cash on hand. And let's not forget the short sellers. These are the investors betting that SiriusXM's stock price will fall. And there are a lot of them. As of our last check, about 27% of SiriusXM's float was being shorted. That's a lot of people who think Buffett's got it wrong, but Buffett got some allies too. There's John Malone, the media mogul, who's the largest shareholder of SiriusXM. And there's the company's management team, who've been aggressively pivoting the business model and acquiring new talent. So, how is SiriusXM planning to fight back against all these challenges? Well, they're not sitting on their hands, that's for sure. First off, they're doubling down on what makes them unique: exclusive content. SiriusXM has been on a buying spree, snapping up popular podcasts and signing exclusive deals with big-name talent. They just got Alex Cooper from Call Her Daddy for a cool $125 million. They've also got Megyn Kelly, Kevin Hart, and even Tom Brady on their roster. But they're not just playing defense. SiriusXM is going on the offensive, pushing hard into the streaming space. They acquired Pandora back in 2019, marking a clear attempt to compete directly with Spotify and Apple Music. And here's where it gets really interesting. SiriusXM has a near monopoly in the automotive sector. They're in millions of cars across America, and that gives them a huge advantage. It's a lot easier to keep a customer than to find a new one, after all. Now we come to the heart of our story. The big question, is Buffett right? Is SiriusXM really a diamond in the rough? Or is it a dinosaur waiting for the meteor to hit? On one side, we've got the bears. They'll tell you that SiriusXM is fighting a losing battle, that streaming is the future and satellite radio is the past. They'll point to the company's massive debt, its slowing subscriber growth, and the intense competition it faces. On the other side, we've got Buffett and the bulls. They see a company with a strong moat, consistent cash flow, and a management team that's not afraid to adapt. They'll tell you that SiriusXM's automotive presence gives it a unique advantage, and that its pivot to streaming and podcasts shows it's ready for the future. So, who's right? Well, that's the million-dollar question, or, in this case, the $167 million question. That's how much Berkshire Hathaway invested in SiriusXM in the second quarter alone. Now, let's talk about what Buffett stands to gain if he's right. Remember, Berkshire Hathaway now owns over 132 million shares of SiriusXM. At current prices, that's worth about $700 million. But here's where it gets interesting. Many analysts believe SiriusXM is undervalued. Some put the fair value at $5.15 per share, while others go as high as $6.39. If those analysts are right, Buffett could be looking at a potential gain of hundreds of millions of dollars. And let's not forget about that dividend. At the current yield, Berkshire Hathaway is set to pocket about $4 million a year just in dividend payments. Not bad for a dying company, huh? But the story doesn't end here. SiriusXM still has a long road ahead. They need to continue growing their subscriber base, fend off competition from streaming giants, and manage their debt load. And there's another twist in the tale. Remember John Malone, the media mogul we mentioned earlier? Well, his company, Liberty Media, owns a big chunk of SiriusXM through something called tracking shares. These shares are set to be merged with SiriusXM's common stock. This merger could shake things up in a big way. It could make SiriusXM more attractive to investors, potentially driving up the stock price. And guess who's positioned to benefit from that? That's right, our man Buffett. So, what does all this mean for SiriusXM? Well, it could be the start of a major turnaround. With Buffett's seal of approval and the upcoming merger, SiriusXM could be poised for a renaissance. Think about it. They've got exclusive content that you can't get anywhere else. They're in millions of cars across America. They're pushing into streaming and podcasts. And now, they've got one of the world's most famous investors backing them. Could this be the beginning of a new era for SiriusXM? Could they transform from a dying satellite radio company into a multimedia powerhouse? Only time will tell. But one thing's for sure. Buffett seems to think they've got a shot. And there you have it, folks. The surprising saga of Warren Buffett and SiriusXM. It's a story of contrarian thinking, of seeing value where others see decline, and of betting big on the future of audio entertainment. Will Buffett's bet pay off? Will SiriusXM rise like a phoenix from the ashes of the streaming wars? Or will this be one of those rare occasions where the Oracle of Omaha got it wrong? Only time will tell. But one thing's for sure. We'll be watching this story closely. And you can bet we'll be bringing you all the updates right here on this channel. So, what do you think? Is Buffett right about SiriusXM? Or is he making a rare misstep? Let us know in the comments below. And if you enjoyed this deep dive into the world of high-stakes investing, don't forget to give this video a thumbs up and subscribe to our channel. We've got plenty more financial detective work coming your way. Until next time, this is How Business Works signing off. Keep investing, keep learning, and remember, sometimes the best opportunities are hiding in plain sight. See you in the next video.